ever consider the potential value of 10 Tesla stocks in 2 years, people these days are quickly growing hopeful that owning Tesla stock could end up being a very valuable asset in the near future. Stay tuned to find out the amount that Tesla stock will be valued in 2024. One of the best methods to make money in the world is to invest in the stock market. The fact that investors can make money from the stock market in a variety of ways is one of its main advantages. However, there is a significant danger associated with the huge potential payoff, particularly for those who want to get wealthy rapidly. Investors should be aware that they run the danger of losing all of their investable cash if they choose to experiment with short-term or aggressive market tactics. If all goes well, though, the options are virtually limitless. Prior to continuing, Moomoo created a new role known as the industrial chain. Let's say you wish to discover which stocks might change over the next several days or months. You will greatly benefit from the industrial chain. It offers a thorough overview of the hottest sectors, such as semiconductors and electric vehicles. Finding stocks quickly, either upstream or downstream, allows you to concentrate on specific industrial segments more rapidly. Additionally, since segments and industries are related, you could forecast price changes more quickly without having to read a lot of research papers to understand the relationships inside a single industry. Description includes link. Now, it's undeniable that Tesla stock is rising despite the inescapable obstacles. The EV company's shares have soared more than 20,000% since going public in 2010, handily surpassing the market overall, often shattering Wall Street's projections and making early investors billionaires. To suggest that the rate of increase is unusual would be to put too fine point on it. When Tesla's share price soared by almost 700% last year, investors and ardent supporters were ecstatic, but many knowledgeable Wall Street analysts were left perplexed. Tesla is now the most valuable automaker in the world thanks to that incredible rise. The price per share of the 2010 initial public offering was a mere $17. According to CNBC calculations, an investment of $1,000 in Tesla made in 2010 would have grown to almost $36,000 by February 4th, 2020, over 10 years later. Calculations show that over the same period, a $1,000 investment in the S&P 500 would have yielded a total return of somewhat over 281%. As of March 25th, 2022, a $1,000 investment purchased in March 2012 would be worth $148,755.87, or a gain of 14,775.59%. This return includes price increases but does not include dividends. Over the same period, the S&P 500 gained 222, 500 gained 223. Analysts, on the other hand, anticipate that Tesla will continue to rise. Conversely, 10 Tesla shares that were valued at $6,940 in June 2021 are now roughly worth $7,500 in June 2022, translating to earnings of about $540. Despite multiple forecasts suggesting that Tesla stock would continue to decline, this is a noteworthy rise. This may be primarily ascribed to Musk's distinct management style and the fact that the EV company is leading the industry in innovation and R&D. Tesla is now working on a number of exciting new projects that are highly anticipated. It appears that these projects will increase the company's income and revenue, which will have a good impact on the stocks. A few of the projects Tesla is hard at work on today before releasing them to the public are the FSD Cybertruck, the Starlink project, and the AI robot known as Optimus. Patrick Hummel, an analyst at UBS, stated, "We believe the operational outlook is stronger than ever before. We expect Tesla's vertical integration in semiconductors, software, and battery to result in superior absolute growth and profitability in the years ahead." He cites substantial order backlogs in 2 new gigafactories in Texas and Germany as evidence that Tesla's operational momentum is another reason to be optimistic. The market still underestimates how much better Tesla will fare versus competitors in terms of growth and profitability. Similar to how they did with electric vehicles, Tesla will undoubtedly be at the forefront of the AI revolution once they have successfully introduced projects utilizing this technology. The company's stock price will undoubtedly rise significantly if this does occur shortly. Prior to the market explosion, Tesla stock was only worth a little over $100. After that, it doubled, tripled, and multiplied tenfold. Investors in Tesla stock owning 10 or more shares may see their money quadruple in a matter of years if the same outcome with the introduction of AI is achieved. The 2021 open source Tesla model, which projected the value of Tesla shares at $3,000 per share in 2025, was modified by Cathie Wood-led ARK Invest to demonstrate that Tesla shares are valued at $4,600 by 2026. They revised their position in response to significant developments such as estimations of capital efficiency, assumptions and inputs related to autonomous ride-hailing, and the forecast's one-year advance to 2026. Based on their examination of consumers' perceived value of time, ARK Invest has updated their model, which includes new estimates for the overall market of autonomous ride-hailing at each price point and the likelihood that Tesla will solve for completely autonomous driving. Because ARK is now more confident that Tesla can achieve full self-driving, they anticipate greater demand for autonomous ride-hails at higher price points than they initially predicted. They must be informed of the ways in which the robo-taxi industry contributes to the model. Although they had previously said that Tesla would never need to introduce autonomous ride-hailing, their recent positive developments have led them to rethink this and believe that Tesla will start the service in 2026, 4 years later than Musk had anticipated. The revised model buy. ARK Invest also improves Tesla's capital efficiency. When the Model 3 was ramping up in 2017, Tesla's capital investment per incremental unit of capacity was approximately $84,000 by the time the 2017 model was released. That figure had dropped to roughly $7,700. They projected that in 2025, Tesla will invest between $6,000 and $8,000 for each additional unit of capacity. Given its significantly higher capital efficiency than anticipated, it could be more prudent to predict that Tesla will invest $2,000 to $7,000 for each additional unit of capacity by 2026. To find out the precise performance of Tesla's stock, visit Mumu link in bio. In the event that Tesla launches robo-taxis successfully in 2026, the expected value will be the mean of 1 million simulations. The year that Tesla eventually introduces robot taxis will have a significant impact on set simulations. In the majority of ARK's lowest price per share scenarios, Tesla does not introduce a robo-taxi network, but instead introduces a vertically integrated human-driven ride-hailing service. In contrast, Tesla does not introduce either service in other scenarios. The firm hasn't made a formal commitment to start offering human-driven ride-hailing, but ARK has already discussed the tactical and strategic benefits of doing so. Crucially, ride-hailing services operated by humans have the potential to generate a healthy, steady income stream prior to Tesla introducing a fully autonomous service. In the event that Tesla introduces a human-driven ride-hailing service, ARK anticipates that its human-driven ride-hailing cars will eventually give way to the autonomous ride-hailing network as it provides service and solutions for completely autonomous driving. While working toward complete autonomy, Tesla may still introduce a human-driven ride-hailing car if it is unable to establish a robot taxi service in the allotted 5 years. According to an article that was published, ARK Invest believes that their Tesla model is methodologically conservative, even though it is adjusted to our predictions for 2026. In 2026, we predict that Tesla's stock will behave more like that of an established business than a fast-growing one. ARK has set a price objective of $4,600 per share for Tesla for the year 2026. According to the most recent model revisions, Tesla's 2026 market value may be between $2,900 and $5,800 per share, depending on the bull and bear scenarios. More analysts predict that outstanding growth in the upcoming years will cause the Tesla stock to soar another 50%. More than that, even after a sell-off, many Wall Street analysts are nonetheless bullish about Elon Musk's electric car company's enormous upside potential for future growth. Over 50% of Wall Street analysts who follow the company's stock are still positive about its potential for long-term growth. Nonetheless, asserting that Tesla would maintain its position as the leading company in the rapidly expanding electric vehicle industry. Garrett Nelson, vice president and senior equity analyst at CFRA Research, maintained Tesla as a strong buy in early June, giving it a price objective of $1,200 per share on the company's long-term growth potential. However, it is crucial to remember that these forecasts and presumptions could alter in response to changes in the economy, which would then have an impact on stock and market values. However, these forecasts should be taken into consideration because they were produced by professionals with a track record of success in the field. Their assessments and forecasts are the result of their own in-depth analyses of the data that is currently available, careful thought, and in-depth analysis of the movements of the Tesla stock as well as recent advancements made by the EV company. All things considered, the company's most ardent supporters greatly value Tesla's ability to generate revenue from sources other than automobiles. Although those side projects haven't yet taken off, they claim that software advancements like Tesla's eagerly anticipated fully autonomous driving mode, as well as a future autonomous taxi service and energy storage unit, could help the business achieve profits never seen in the auto industry. thus justifying its inflated valuation. Please remember to subscribe to our channel. We'll make sure it's worthwhile.